It's Tuesday at noon, and it is time to get real with Eddie, helping you get all the information you need to get all of your real estate goals accomplished. And as always, with me, I have Terry Trotter Early from the Federal Savings Bank, NMLS 579177. Terry, how are you today?
I am doing great, but more importantly, I'm dying to hear about how the big birthday went.
Birthday went well. It was really, really good. We were dealing with the shutdowns and stuff. So it was a little on the lower key this year. We she got My wife got a new car recently, so I got her new floor mats for the car. She was really excited about those. I'm not going to say who, but take a guess. I think everybody knows where we got the floor mats from.
Yeah,
So she
yeah,
was really excited about those, and it's more fun. Everything's more fun with the little guy. I mean, it's just so much more intriguing to see how he reacts and what he does, and it just really, really does change perceptions on a lot of things. So
nice.
it was just an outstanding birthday. I'm really, just relaxing and not much, of anything. Little guy went over and made homemade pizzas with grandma early on birthday, and my wife wanted to go and do a little shopping, so we did get that done. And she was just happy that was able to carve out time, and which I try to do as much as I can for her. And it was a really good day. So
Good.
uh, I realized my wife's birthdays have toned down since the little guy, because she was the one that really started birthday month. So those that know me, I believe as an adult, you should get birthday month, not birthday, because I mean, let's be honest, we don't get a party hardly anymore, and you don't got tons of friends showing up from wherever, school, work, whatever, giving you a party for your birthday. So I believe in birthday month, and you celebrate it all month because it's better to be 6 feet up than 6 feet under, in my opinion. So
Absolutely.
absolutely. Speaking of people excited, it seems getting into the real estate world, Americans are gaining more confidence on the economy. So, the September jobs report that was issued from the Bureau of Labor Statistics reported the unemployment rate dropped to 7.9%, something we've been talking about on the show for a long time. Is the faster we get under 8%, excuse me, the better off we will be. And September's job number came in at 7.9. That is a amazing turnabout from being at 13.4 in April. I think it was April's job report put us at 13.4. So we're seeing a large jump. And I'm seeing it in the marketplace. I really am. We're back on phones today because both of us are so busy. We forgot to allocate drive time to get to the station.
No,
Talking about the
we
world
got
changing.
spoiled there.
What's
Yeah,
that?
we got spoiled there for a while with doing only Zoom meetings for so long that, yeah, it's hard to remember, or not hard, but I've just got to retrain my brain.
Well, I mean, and that's the thing. I mean, you look at some of the issues that have happened, but you also look at some of the changes that could be positive. I mean, I've noticed at the association, we're seeing more participation with our individuals in our groups by having these Zoom meetings. I mean, it really is making an impact when you're talking about taking someone's time up on driving 20 to 40 minutes to get to the association office or whatever you may be doing. Maybe you've got a fundraising group you're with, maybe it's a charity group. I'm a Lions member. I know we've done a lot of stuff on Zoom on Lions, even though it's been very hard for me to keep up with Lions in the last year and a half, just because of my participation is so heavy with the association right now. Um, it's, but it really is changing. do you have that in-person meeting, or do you have it, or do we just do a Zoom meeting depending on the situation? It used to be, okay, is this a reason to have a meeting? Just don't have a meeting to have a meeting. But now it's gone to another level.
I agree.
So getting back into the index, the percentage of respondents who say they are not concerned about losing their job in the next 12 months increased from 78% to 83%, while the percentage who say they are concerned decreased from 22% to 16%. As a result, the net share of Americans who say they are not concerned about losing their job increased 11 percentage points. So I hear this a lot. I've heard this a lot from appraisers, and this is the big market where I think appraisers have been, I've seen a lot of appraisal issues this year. I don't know if you have.
Not as many as others, but I've had some recently.
And and when I talk to the appraisers one-on-one, their biggest concern is, well, the jobs market. They're cautious because they think the jobs market is going to come back. And those statistics were the latest purchase sentiment index from Fannie Mae. So when you're talking 83% of the people are not concerned about losing their job, that's a lot of faith in the economy.
Well, and I think it's so interesting, even the unemployment, because of course those are national unemployment numbers. There are quite a few states that are taking different approaches and are very locked down, while some states are completely opened. So it's just, I feel those numbers are even stronger, knowing how many states aren't really allowing
open. Yeah, I mean,
anything
look,
to be
we're
open.
doing more lockdowns here in Illinois, as we see 6 of the zones are seeing spikes in COVID. So yeah, I mean, so if you're getting more and more lockdowns, I mean, that is affecting individuals on their income and where they're at stability wise. So
I just think that makes that number more impressive, that it's not higher.
Yeah. So the Wall Street Journal also reported Americans are starting new businesses at faster rate in more than a decade, according to the government data, seizing on pent-up demand and new opportunities after pandemic shutdown and reshaping the economy. I think that is awesome. As someone that's been self-employed pretty much his whole entire life, the last job I worked was 9 to 5, and that I got paid by somebody else. I wasn't really a 9 to 5 job. It was a sales job. I worked at a music store, and I was 23 years old. That was the last time. And it was funny is they let me go because they didn't think I cared about my job. Even though the day before, 2 days before they let me go, I was out doing work on what was supposed to be my day off for the job.
Yeah.
What it really was is that business was opening and expanding. And just like any other business, they wanted to cut labor. So they used it as an excuse. It was and the reason why is I was late. And the problem was it was at a time where they were taking 59, if anybody remembers, I'm going to date myself now, from 2 lanes to 4 lanes. So Route 59 going, because the music store was up north a little bit, and I'd have to go at 59. So through Plainfield, if you remember, all of that used to be a 2-lane road. And now it's 4, and nobody remembers it being 2 lanes. So that was
back in the day.
Back in the day, yes, back in the day. So, I mean, I get it. If you feel like you can run your own business and you can start your own business, that's awesome. That's outstanding.
Again, I just think it goes back to just the ingenuity of the American spirit, because I think so many people are saying, okay, we're in this new situation, and they've just got these creative ideas to solve some problems. So kudos to them for going out there and creatively solving problems, creating a niche market for yourself in this situation we find ourselves in. I think it's just fantastic.
Well, and the Wall Street Journal explained, because one of their questions was, why would someone start a business in the middle of an economic crisis? And they explained the jump may be one sign that the pandemic is speeding up creativity, destruction, the concept to describe how new innovative businesses often displace older, less effective ones. So buying long-term prosperity. So basically, it's be the same concept that we're seeing right now going on with, Amazon. Everybody's saying Amazon's putting out brick and mortar. Well, I always said, well, yeah, but brick and mortar put out catalogs. So isn't this just a revitalization of technology doing it?
And I'm
So
still a firm, yeah, I'm still a firm believer. I, I don't think Amazon's going to be out. I think that, as we talked about, people are just going to get more creative with how they're doing it and what they're doing. And I think that particularly after this pandemic, I think that face-to-face and in-person is going to be so valued. We've just got to get there.
Yes. Well, and that's with me. I'll meet new clients and we'll get phone calls. I don't think the value until we meet in person. Now, mind you, we masked and the whole 9 yards and doing all of the precautions. But I don't think the true value of a client, a seasoned a real estate professional, until I do meet them in person, at least for a real tour. I know a lot of clients, you're always on the phone, so it's a different dynamic for you. And I know it's a
Right.
different dynamic for the attorneys and things along those lines. But for me, the realtor, the one that's going in and out, showing the properties, it is a really intriguing concept when it comes to that. So moving ahead, we do have increased lockdowns coming, and not in just Illinois, but in other states. So as we're looking at this, the question comes is, do you need to know more about forbearance and mortgage relief options? And I do think this is something that came out of the CARES Act, and there's options out there, but you need to understand what you need to do. So there was a pause placed on initiating foreclosures back on March 18th, and that has been extended through December 31st. So the foreclosure process cannot start, from my understanding, through December 31st. So second, homeowners are able to obtain forbearance for 180 days following the potential following an extension for up to another 180 days. Now, there's some things that they need to understand when you're getting forbearance and what those are. Would you not agree?
Oh, yeah.
So,
yeah. A lot of this also, it's interesting because it's evolved a little bit. When it first came out, there really wasn't much guidelines to it. And banks, we like guidelines. We like to know what to do, so it's very clear, it's cut and dry. So this kind of evolved a little bit, but in the beginning it was they were offering a 90-day and then a year, and now it looks like it's kind of morphed to 180 days, and then you can have a 180-day extension. So that's interesting to me.
Well, and here's the thing. So they did a survey on why some individuals have not obtained the forbearance. 69.88% fear of a lump sum repayment. 56.63% did not know they could request forbearance. 20.48 servicer does not allow. Okay. 13.25 servicer required proof. 34.94, and obviously this is not 100%. This is, I think they were asking, it seems like multiple questions based on these percentages.
Yeah, so they could check all that applied to them.
Yes, yeah. So 34.94 are having difficulty connecting, and 31.33 marked an other option, So, I mean, this is, and while we talk about how great the economy's going and how great everything's going, there are some people still that are still struggling. There's a lot of people out there that are struggling, and they need to know what options they have. So the Urban Institute explained 530,000 homeowners who became delinquent after the pandemic began did not take advantage of forbearance despite being eligible to ask for the plan. These responses reflect a need to provide better information to all homeowners. So, I mean, there's a lot of information that's out there that, just going back to the first 2 points is foreclosures have been stopped through December 31st. Okay, and homeowners are able to obtain forbearance for 180 days, followed by a potential extension for another 180 days. So keep that in mind as you're talking. But I think you're right. When you talk about forbearance, you need to know, okay, what do you need to know and what you should be asking? So, and asking them what their options are. Is it a lump sum payment? Are they going to have to make an additional payment broken up for a certain amount of time? Or is that just a lump sum on the back end of the loan?
And that has evolved as well. In the beginning, it was 90, what I was hearing was that they could not pay for 90 days, but that on day 91, it was a lump sum payment that everything was due. Then if they extended it, there were some different options on extending that loan or putting it on the back end or doing all of those different scenarios. But I find it, so I do want to kind of hone in just a little bit on that 20.48% where they said the servicer doesn't allow. I think it's important to realize that the forbearance was only for government-backed loans. So that means a loan that was sold, Fannie Mae, Freddie Mac is backing it. That's some of your conventional loans. Your FHA, VA, USDA loans, which everyone's like, oh, that's the whole market. It is not. There are some little banks, smaller banks that use their own money. There's many different things that it could be. So it is an option for a lot of people, but it's not going to be an option for everybody. You kind of need to do that research and dig in a little bit to see who really owns that loan.
You really need to make sure you know and ask, well, is this a Fannie Mae loan? Is this a Freddie Mac? When you're talking to your service provider, you need to ask some questions. You should know on whether it was FHA or VA or a USDA loan when you bought the property. Those things you're going to know. Sometimes people don't realize that they got a Fannie Mae or a Freddie Mac, especially if they're going conventional, and some of those are conventional products. So
and in the same regard, I think it is more for conventional. They would not. A lot of people don't know if it's Fannie, Freddie, or if it's that bank's own money, and that's important.
That is important. So here's the biggest thing I would recommend on this, and that is you can review the Protect Your Investment Guide that the National Association of Realtors has out. Just Google, Protect Your Investment Guide. NAR, and you should be able to come up with that. And Homeowner's Guide to Success from the Consumer Financial Protection Bureau, the CFPB. So Google those 2 terms, and you can get a lot more information on what you are allowed and what you're not allowed to do. And I think that would be an outstanding maneuver for anybody that needs help.
If someone wanted to look at this article, where can they find that on your website? What's a good place for them to go?
Just go to getrealwitheddy.com and look for it. Or you know what? You can also go to Eddie Ruettiger, Ruettiger, because I know it's a mouthful. And you can pull up the information pertaining to the articles there. So you're going to want to do a search on that for, again, the name of it. Do you need to know more about forbearance and mortgage relief options? So that's on my blog, either one of those pages, either eddieruettiger.com or getrealwitheddy.com. And you should be able to get to the article eventually. You'll have to dig for it. or just give me a call, 815-823-5478. I can send you out this article, and we can look at trying to find those links to those organizations. I know we had a lot of links to the CARES Act up on the radio show for a site, so we'll have to double check and see if those are still up there. Moving on, Joliet numbers are in, and Joliet, these are our numbers through September, ladies and gentlemen, finally, and we are seeing some big movements. So month over month for September, Joliet is up in median sales price 15.3%. The average sales price is up 13.1% month over month. All right. Inventory of homes for sale at the end of the month is down 48.7%. Last year we had 339 houses. We are down to 174 houses. 174 houses for sale, single family homes for sale in a city that has a population that is, I think we're at what, 120,000 for Joliet?
Wow.
I want to say, I think a lot of people think we're going to break 160 population wise. And then if you just add in attached, you're at 34 more units for sale at the end of September. So you talk about what, 200 homes, just over 200 homes, between attached and detached. That's insane, and as far as I'm concerned. Looking at the numbers when you're talking percentages and actual sales price. So median sales price of the trailing 12 months, because we like to follow the trailing 12 months the most. 185 on the median, up 5.7%. 189,934, up 5.3%. So that is nice increases. Nice 5%. I like that number. A little high for you, Terry, or are you okay with that?
I'm good with all things considered, and with the lack of demand and that shortage that's creating this drive. Yeah, that's fine.
I am not seeing this being a bubble market at all. I think there's plenty of demand, and with the unit shortages, I think we're good. Attached single family, we are at 7.4%, and we are at up 7.4%. Median sale 177,250, and average is 167,960, up 9%. Biggest number I want to point out here is percentage of original price on an attached condos, duplexes, townhomes, 97.7%, up 1.2%, and average market time is at 45 days for an attached house. That is down 10%. So great numbers looking at Joliet overall. Again, we're going to talk about this later in the show. It is time to list your house. If there is I don't think there is a spring market. I think we're going to be having right on through into spring. And if you are looking to move now, there is no reason why to wait or hold off. And I actually think you may do better because you're going to have less competition. So, all right, stick around here on 1340 WJOL. We're going to be talking more about the values going up and those projected numbers for next year. Get Real with Eddie here on 1340 WJOL. And if you are looking for information on getting a home loan, give Terry a call. She can help you whether you're looking at a conventional, a VA, or an FHA. Give her a call at the Federal Savings Bank. Terry, what's the best number to reach you at?
Yeah, my cell phone is the best way to get a hold of me, and that is 815-712-7848.
So looking at where Joliet has gone with this 5% increase in home values and everything that's going on, we're got an article coming out looking at the home values projected for 2021 to keep rising going into the final months here of 2020 and seeing where everything is going to be at. And the home price appreciation forecast over the next 12 months. So Zillow is looking at a 7% increase in value over the next 12 months. Zellman has 5.9. Freddie Mac is at 5.5. The National Association of Realtors is at 4.3. HEAPS, HPES, I don't know which one that is right now. Why am I not realizing what that is? That's 3.7. What's that?
I don't know
I
that one
can't
either.
remember it. I know you know this one. MBA is at 3.4, Mortgage Bankers Association. And CoreLogic is still only looking at a number of 0.2% over the next 12 months. I don't know why CoreLogic, I think, as we talked about earlier in the show, everybody worries about the jobs market. Jobs market looks pretty steady, pretty solid.
I think even if we lop off that, let's say that those are really, there's the one outlier is CoreLogic, but even if you take the top and the bottom off, I mean, you're still looking at from 3.4 to 6%, 5.9% for the rest, which is average appreciation, if not a little bit higher. So that's great.
I would agree. I think you're probably, I'm looking at a 5% appreciation rate. I think where Joliet is at right now, we are going to see that 5% appreciation continue moving forward for the next 12 months. I don't see it getting higher or hotter than that at the moment. I see appraisers being the holdback. Now, and I don't mean to be bashing appraisers if someone's an appraiser listening to show, because I know a lot of the industry folk do listen, and I appreciate it. They're looking at certain data points, and some of them I have had out of 3 appraisals this year, actually not this year, but in the last like 3 months, that were bad. Okay. The one appraiser got it right, and it was in favor of my client. All right. I did not tell the client to write what they wrote for. They wrote for it because they were worried about multiple offers and bids, and they felt there was nothing else on the market like that, and they made that decision. So the assumption's always, oh, the real estate agent told them to write the offer that high. No, I gave them the data and the appraiser and I right on page. I had another one that hurt my client. We had the seller, and I think the appraiser came up short. They did not take in a lot of information, a lot of data pertaining to where the market was going and specific situations for that property. And that hurt my seller. And then I had one where it worked to my buyer's interest. The price got knocked down, but I looked at my client and said, I think the appraiser's wrong on that one because it went down. They knocked it down, and the house was worth every bit of what they offered on that one. So it just all depends on the situation, and it depends on the data that they have, and it's hard for appraisers to take into consideration how do I voice a future market or current market conditions.
And we actually, I feel like from an appraisal perspective, this does feel like when we were coming out of the recession and home prices were appreciating and homes were selling for quickly, and sometimes it feels like the closed comps just haven't caught up to what the current market is willing and able to bear. But that's what that appraiser's there for. They're non-emotional, they're objective, they're able to look at the data and say, yes, this is appropriate, or no, I can't substantiate that price.
And that's a valid point. I think that it is looking at a problem with the appraisers. You get something comes on the market, it's under contract in 2-3 days. Mm-hmm. But we're seeing closings take 45 to 60 days. So yeah. That is a good delay in the market to give that data points back to the appraiser. And it does make their job, they have a very hard job to deal with that.
And it's hard. And, in one of the situations that I was involved with when, obviously I represent buyers, And the appraiser, I have no contact with them. A different person in our bank does all of that. Um, so they can be, there's no influence, there's nobody, but the people in the transaction were very passionate about um, why this home should be worth this. It didn't appraise out. But that appraiser they're a non-emotional entity that's just looking at facts and data. And there is an appeal process. And during that process, I kept saying, well, what do you have additional facts that weren't represented in that appraisal? And just trying to bring people in to think about, I know that you feel like it should be more, or you feel like this market is demanding more, or this shortage of homes means that they're worth more, but it has to be supported by facts.
Well, and that's exactly right. It's got to be facts. I mean, and the article rounds out, and we talked about this earlier in the show with individuals in forbearance needing help. All right, but they had Ivy Zellman, CEO of Zellman and Associates, on a podcast, and they discussed there is the likelihood of us having a foreclosure crisis again is absolutely zero, and that becomes into the play of these home prices are going up 5% in Joliet, and we're seeing increases even higher in other areas. Romeoville is a great example, and things like that. If you've got equity in your house, you're not going to let a bank just take your house back and give up all that equity. You're going to put your house on the market and you're going to sell your house.
Right.
So that's a big aspect.
I agree. I think that's what distinguishes this from that foreclosure crisis we had the last time that we had a recession. But the housing market is so strong, and with just even if you bought your house last year with that 6% appreciation, hypothetically, if you put a little bit down, you should be able to get out of it. You might not make money, you might lose your investment, but you can get out of it.
And you're not getting that foreclosure on your record. So with these prices going up, our next article is discussing about how to prepare for a bidding war, because we're seeing a lot of bid wars. I mean, we just had one over the weekend. My client put what she felt the house was worth, made that offer. We put in a couple of our, things that have helped us win these bidding wars, and she did not win the house. So it was that simple. She seemed to be comfortable with it because she put in her highest and best. But some tips on, looking at getting ready to be in a bidding war. Number one is get your mortgage approval. So you're calling Terry. I mean, honestly, Terry, how many times are you seeing or hearing or getting people calling you at the last minute? Oh, we have an offer in. We need to get a pre-approval.
It happens a little bit. Actually, I shouldn't say that. What typically happens is they called, I don't even know, some random thing they saw on the internet or something, and they didn't get any of their documents in. So that's an extremely weak pre-qualification, I would call it. It's not even a pre-approval. And then they get into it, and the listing agent wants to know more details. Nobody can get a hold of that random person they called. So then I get a phone call with, can you help us? And there's some scrambling with that. But I would say most people truly are heeding this. I think it's because they're home and they're able to do some research and they've got time to pull documents. I would say that I think most people are taking the time to do that stuff.
Well, and the numbers show that in August, 55% of the home sales resulted in a bidding war, and 69% of homes were sold in less than a month. So, I mean, having that pre-approval, it shows, guess what? I have the ability to buy. I mean, honestly, if I came up and offered you, $50 to buy a bicycle, the first thing you're going to say is, okay, where's the $50? You need to show proof that you have that ability. And unless you can, so getting pre-approval, or if you are a cash buyer, you need to get your funds in order, because they are going to ask for proof of funds. So this isn't just, well, I'm cash, I don't have to do that. Okay, well, show us the cash. Usually what that requires is you printing out a bank on bank letterhead. So you need to have the bank letterhead there, your name, and the balance of the account. Yes, you can black out your account numbers. I recommend crossing off the account numbers all the time.
Isn't that like that Jerry Maguire, show me the money? No seller is going to accept it
Show
without
me
proof of that money.
exactly. So the other aspect is now you know what you can afford.
I think that's really valuable. And one of the things that I, not to toot my own horn, but I think I've spent a lot of time on that because it matters. And when you think about this bidding war, it's important to know that you know your budget, you know what your top dollar is, and you also know that, all of my clients, there's an app they can put on their phone. So if this counter offer comes in at 10 o'clock at night and I'm not available, they can jump on and know what that payment would look like. It just gives more control and more information to the borrower.
And more importantly, how outstanding that app is. We can be out on a property, looking at the property, and that property may have an HOA fee. And originally we're going to go with a property with no HOA. And all of a sudden they change their mind, they see their dream home, and they go out and look at it. Or the property may have higher property taxes than they were originally considering. So now they put that into the app, boom, 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 and they see exactly what their monthly payment is, and then they can go from there. So it gives you the ability to do the final aspect that we talk about, and that is put in your best offer. So, now you're lowering your contingencies because you don't have to wait for the pre-approval letter, and that's a big thing, is having less and less contingencies. The less contingencies you have, the better an offer is going to seem to the agent who's going to then put it on to the client. I mean, honestly, one of the things that we have discussed with our clients is going as is, and take it or leave it. You still can do your home inspection, and we've won a lot of bids this year because of doing that. The other aspect is, you want to be competitive on the price. Don't get stuck on the listing price. A lot of agents I'm seeing are listing, just below the market value to get more showings, to get more of that bidding war. I don't know if that's necessarily the right way to do it. I personally don't think it's the correct way to price the property. You should be pricing it at market value, not below. But I have seen some properties undervalued, and they are looking at getting that bidding war going to get it up. So, and then I find if you can be flexible with the closing date, that is going to definitely help your options of closing too. So the problem with that flexible closing date is you got to be talking to an outstanding lender like Terry to know how fast can they actually close the property right now. Don't be putting 30 days on a contract, and with the appraisals and the underwriting process backed up, you need to know where they are in that process.
Yeah, and it depends, because appraisals, title companies, attorneys, every single step along the way, everybody is working really hard, putting a ton of hours in, but it's definitely taking longer than it was last year this time.
Absolutely. All right, we're going to take a quick break here, and when we get back, we're going to talk about my listing on 1502 Spring Oaks. They have dropped the price, so stick around here at 1340 WJOL. 1340 WJOL, and we are back talking about the listing I got at 1502 Spring Oaks Drive in Joliet. This property, it's just, we're getting great traffic, and it's a great house, but we've had a little bit of a stick in the mud, and I'm a little shocked, but it happens. And the seller has dropped the price $10,000 from $250 to $240. I think we're going to get an offer this week with this price change. But it is a 4-bedroom, 2-bath quad home. open floor plan concept. It has a walkout lower level. So right into the backyard, you have a shed back there, and you're looking at an outstanding opportunity here right in Joliet, Troy Schools and Joliet West High School for the high school level. And great property if you are looking for something under 250. This gives you a 4-bedroom option. Really, really surprised, but I think we're getting into that election market that we've talked about before. And I think that's, I've seen a little bit of a slowdown, not dramatically, but this might be that one property that's running into that.
Yeah, it looks like it's got a nice backyard, great shed, so lots of outdoor space. I could see like a kid's play set back there or a pool if someone wanted to do that. It looks like it's got a lot of opportunities for to add your own touch.
Absolutely, absolutely. So take a look at that, pull it up on your whatever you're using to find your properties at 1502 Spring Oaks, or go to yourdwellings.com and you can pull that property up right there. So talking about just selling your house right now, everybody thinks that, it's fourth quarter, or we're getting into fourth quarter shortly, that, nothing sells, nothing sells. No, we are in fourth quarter, correct? Yes.
Well, yes.
This is what happens when you're locked down for 2020. You forget what
October, November, December. We are firmly in it.
Yes, fourth quarter, officially in it. So the demand from home buyers has skyrocketed. So there are 62% more home showings than last year at this time. The number of houses are down by 38%. So that is really increasing demand. So compared to this time last year, the median home price is up 15%. That's an average of $40,300 in 1 year of an increase in your property value. So there's more bidding wars. You pick the best. They're picking the best offer. You get to negotiate terms that work for you. So really, going into this, if you're looking to sell your house, it's a great time to put your house on the market. Waiting until spring might not be the best move for you.
Well, and I think that's a big misnomer, which you've talked about. Fourth quarter, from someone who's worked with you closely for years now, that's always a strong one for you. And
Yep.
I just think that there's just some opportunities right now that you can capitalize on and get moved in before the snow really hits. That snow yesterday got everybody realizing it's coming.
So yesterday's wife's birthday, and it's snowing.
I thought about her. I know how much she hates it.
She hates the snow. And she has a meme of Lucy from Charlie Brown that every time it snows, and I can't say it on the radio, but she posted it and was posting it. She's like, it's snowing on my birthday, which now gives me, so my wife has a theory. My wife always takes her birthday off because she always says, has a belief, whatever you do on your birthday is what you do all year long. So this year she took it off. Of course, she wanted to spend time with me, spend time with her son. That's what that's her belief. So now that it snowed on her birthday, if we get a lot of snow this year, I'm completely blaming her. I'm gonna blame the wife. I will be honest. So, but yeah, she was not happy at all about the snow yesterday. So, and I have said, I think that is the only thing that's going to slow down this market is if we get a huge hit of bad weather, where it's snowing and, I don't think the snow itself is that bad, but like the snow we were getting was that rainy sleet mixed snow. People don't like to be out in that. If it's that snow, nice Hallmark Christmassy moment snow, oh, that's so pretty. Yeah, let's go out in that.
Yeah, my kids, which they now say it too, but there's the warm snow. That's like the hallmark snow, or like sometimes late spring that snows, but it still feels warm. It doesn't feel just bone chillingly cold. That I
Uh-huh.
think is fine, but when you get into those like, oh man, that 30-degree below and all those just, oh, that's rough.
So wrapping up this the topic here, I mean, the idea that we're looking at is with this demand, these price increases, the demand is not going to necessarily last forever. At some point, the demand is going to fall off. So why not? Why wait to what you don't know? Take advantage of what you know. Put your house on the market right now.
Yeah,
And
capitalize and yeah, have that big down payment for your next one, and then also capitalize on low interest rates for your mortgage on your next one.
well, I mean, is that not a win-win for a seller? Not only are you
Oh
going
yeah,
to get top dollar, but you're going to get these low rates and be able to take advantage of these, epically low rates moving forward and save a huge amount of money moving forward. I mean, this is what we talk about. This is what is the difference between a renter and a homeowner. This is what causes that difference in net worth from 200,000 to around just under 6,000.
yeah.
This right here. I mean, and I think we're gonna start seeing that number expand between net worth of a homeowner and the net worth of a renter because of the market we're in. I mean, you're really going to see that growth and that changing over the next year or so.
That,
So,
that's logical.
well, and that's the thing, yes, at some point the demand is going to go back to normal. I don't see that doesn't mean real estate market's going to completely collapse or fall. It's going to go back to normal. And getting out of a 5% increase like we saw in Joliet, getting down to a normal 3% to 4%. I mean, it doesn't sound like a lot, but I mean, when you're looking at the national median existing home prices up 15%, that's the big difference. I mean, and
Right.
we usually move a little bit slower in the Midwest. We're not, let's jump on the bandwagon and take off. We usually are a little bit more, okay, how is this playing out? Where is this going? We've always been that way historically when it comes to housing.
That makes sense.
All right, so anything for the good as we get ready for the week ahead of us here?
Uh, just plan to vote. Just
Planning
make a
to vote?
plan and
Yep,
vote.
getting
Yep.
everything out. Well, that's next week. So that actually next week's show will be on election day. So we'll be
Oh,
looking
that's
at that
true.
and moving forward as we go from there. So,
Sounds good.
um, I know we've got a closing coming up this week. I'm going to get ready to get that closing taken care of and, get us to the table. So, with that being said, that fills up today's show, Get Real with Eddie. If you guys want more information, don't forget, go to getrealwitheddie.com.